Ready to go?
Yep, ready when you are. So if you can go ahead and go to the next slide. So again, as I mentioned, the Restaurant Revitalization Fund, also known as RRF, was passed with the American Rescue Plan Act, also known as ARPA, became public law March 11th, and it appropriated $28.6 billion for RRF, and it authorized the SBA to award these funds. The appropriations remain available until they are expended. So in other words, they're going to accept applications until the funds are gone. But obviously there's always application deadlines, but sometimes in most cases, funds quickly disappear before those deadlines approach. So that's what that means. And funds must be used for eligible uses no later than March 11th, 2023. Unlike our other programs, which had a shorter time period to have the funds used, this is allowing businesses a longer time frame to be able to use up these funds. Next slide, Victor. So again, who is eligible? So our eligible entities are those that are not permanently closed, and it includes businesses where the public or patrons assemble for the primary purpose, and that's the key word here, primary purpose of being served a food or drink. So this will include obviously our restaurants, food stands, food trucks, and food carts, caterers, bars, saloons, lounges, and taverns, snacks and non-alcoholic beverage bars. So this includes our coffee shops and our ice cream shops. Now these following entities like bakeries, brew pubs, tasting rooms, tap rooms, breweries, microbreweries, wineries, and distilleries, same thing with inns, are also eligible. However, they have to at least comprise of 33% of gross receipts. So it can't be wholesale. So bakeries, you know how sometimes they have contracts and they drop off a lot of their baked goods at a grocery store. So at least 33% of the gross receipts has to come from public, from their sales to the public, not through wholesale. Licensed facilities or premises of beverage alcohol producers where the public may taste, sample, or purchase products, and other similar places of business in which a public or patron assemble for the, again, keyword here, primary purpose of being served a food or drink. And so all of these entities, again, as I mentioned, that have the asterisk have to meet that 33% or greater of on-site food and beverage sales for 2019. Next. Okay, so who is ineligible? So entities that are ineligible, if any of the following apply. So if they are a state or local government operated business, and as of March 13, 2020, they own or operate, and the parentheses here, together with an affiliated business, more than 20 locations. And that is regardless of whether those locations do business under the same or different names or in different industries. They have a pending application for, or they have received the Shuttered Venues Operator Grant, which was another program that came out to help our shuttered, our venue, which sometimes would fall under the category of restaurant, is a publicly traded company, is permanently closed, is a nonprofit organization, and if they are not eligible for funding of at least $1,000. So they have to meet that minimum award requirement of $1,000. Next slide, please. So how much am I eligible for? Again, I mentioned in the last slide how they have to have a minimum award of $1,000 to be eligible, but the SBA may also provide funding of up to $5 million per location. And this is to not exceed the $10 million total for the applicant and any affiliated business. So it's quite a large amount that some of these entities are eligible for. So again, a great program to take advantage of for our restaurants. And we're going to talk more about the advantage for our smaller locations. So, but that'll be later on in this presentation. So if we can go on to the next slide, please. So how is this program different from other SBA programs? And we've had many especially for COVID, to help the PPP. We've had the economic injury disaster loan. So a lot of these programs, or even grants like the shuttered venues, they were requiring for people to be registered in SAM.gov because it is the systems of award management for the government where they issue grants. But applicants for this program do not need to be registered in SAM.gov, and the SBA will not require a DUNS or a CAGE identifier, but they have to have a valid unexpired ITIN. And if you can visit these links here, the individual taxpayer identification number at the irs.gov, or you can also go to irs.gov to read more about ITIN expiration frequently asked questions. Again, both of those are on the irs.gov website. Next slide, please. Again, who is eligible? And then we're going to discuss the form of organization. So eligible applicants must be one of the following forms of organization. So they can be C corporations, S corporations, partnerships, limited liability companies, or LLCs, sole proprietors, self-employed individuals, independent contractors, tribal businesses, LLC taxed as S corporations, or sole proprietors. So again, that's little asterisk. If you notice, some of these have asterisks, so they refer to your tax return to see self-employed versus sole proprietor distinctions. And then B corporations are eligible, but they will select either a C corp or S corp on the application, and that is depending on how they are taxed. So again, that asterisk here applies to those. Next slide, please. So franchises, we all see those franchises around here, McDonald's, Subway, Taco Bell, those popular fast food restaurants. And here we're going to discuss how they're eligible. So any business concern operating as a franchise and meeting all other program requirements is eligible. So the franchise must be listed in the SBA franchise directory. And in the application portal, applicants will be able to look up their entity on the SBA franchise directory. So when they're going through the application process, if they are a franchise, they will have to find their restaurant in the SBA franchise directory. For brands not listed in the directory, including brands that are previously been denied listing on the directory because of affiliation issues. Now, for those, the franchisor must submit a franchise disclosure document. And all other documents that a franchise is required to sign to the franchise at SBA.gov. So, and it will be reviewed and the SBA for eligibility criteria, and this is the CFR for that. But again, if you don't find your restaurant, don't panic. Go attempt to see if you can go to the sign the franchise disclosure document and send it to franchise@sba.gov. Next slide, please. Bankruptcies. The great thing about this program, it's so flexible and it's less restrictive. A lot of our other programs, bankruptcies were making companies ineligible. So for this program, applicants that are operating under an approved plan of reorganization that are either under a Chapter 11, Chapter 12, or Chapter 13 bankruptcy, and they meet all the program requirements, are still eligible for funding. An applicant that is not eligible if they are permanently closed, they filed a Chapter 7 liquidation bankruptcy, or they filed either a Chapter 7 or Chapter 11, 12, and 13 bankruptcy, but is not under an approved plan of reorganization. So again, you have to be under an approved plan of reorganization to be eligible and not be permanently closed. If you're permanently closed, does not include businesses who were temporarily closed their doors due to the state and local restrictions or other pandemic causes, but are still in operation or have reopened. So if you were temporarily closed because of the pandemic, you are not considered permanently closed. It's for those entities that closed and were not able to open back up because they just simply did not have the funds to do so and really felt that their only option was to permanently close their business. So unfortunately, those entities will not be eligible for this program. Next slide, please. So affiliation, you must count all locations owned or operated under your applicant's business EIN and your applicant's business affiliates. So even those that are not eligible for RRF. So you have to include all of them. So counting all locations, and this will break it down more for us here. Any entity that together with its affiliates owns or operates more than 20 locations, regardless whether the businesses operate under different names or a different type of business, is not eligible for RF, as I mentioned earlier. And this, for example, is if a business and its affiliates own 16 dry cleaners and 5 restaurants, your business has 21 locations, which means you're not eligible, even though you only have 5 restaurants, but you have 16 dry cleaners. So unfortunately, you do not qualify. Each place where the applicant or affiliate conducts sales for a permanent structure is counted as a location. If the applicant or affiliates conduct sales for multiple permanent location, each address is a separate location. And then for a caterer or a single business with multiple food stands, trucks, or carts, the physical location is where the business is headquartered. So example is if a business with a permanent structure and 5 food trucks will have 1 location. So a caterer will have 1 location. Next slide, please. There we go. Corporate groups. Again, this is still under affiliation. So for our corporate groups, locations that are owned or operated by a single corporate group will count towards the 20 location maximum limit for eligibility and the 10 million aggregate limit on RRF funding. Businesses that are part of a single corporate group that in the aggregate own or operate more than 20 locations are not eligible for RRF funds. When individuals or entities directly or indirectly own or control multiple locations, all locations must be counted towards the 20 location maximum limit for eligibility and the 10 million aggregate limit on RF funding. I know this sounds super detailed and complicated for our corporate groups. And this will also include any locations that operate under separate tax identification numbers or names and applies whether or not ownership or control is through an individual management or holding company or other entities. For example, an individual owns or controls 16 restaurants, each with a separate tax identification number, and 5 gas stations. Since all of these businesses, restaurants and gas stations, they must be counted. None of the restaurants are eligible for RRF funds. So I know that sounds really complicated, but yeah, they're being really, really detailed and strict as far as owning multiple entities, and they really want to make sure that that our smaller locations and are those entities that are more at disadvantage are eligible. So those businesses that have multiple locations and multiple types of entities will not qualify. Do you have anything to add to that, Victor?
No, ma'am. The only thing we do ask is if you're going to do the application, as far as eligible entities, as far as affiliation, make sure that you annotate on any of the documents you submit to us, any businesses that your company owns or that you own, so that it makes it easier for us to process. If there are questions, your application will be kicked back. So the more information you give us regarding this or any change in entity, please let us know right away or within the same time of the application.
Thank you, Victor. And we're going to talk more here in the next slide, if we can go to the next slide, so that when you're filing your RF application, you will be asked if the applicant has affiliates, and you must select yes. So if the RF eligible applicant entity has equity interest or right to profit distributions of 50% or greater of one or more other business entities, and or you must select yes if any owner of 20% or greater equity interest of the RF eligible applicant entity has an equity interest or right to profit distribution of 50% or greater of one or more other business entities. So again, it's when you fill out the application, make sure that you are answering these correctly, and that you are and we'll tell you and explain to you where you can go get help. I know that this all sounds very technical, and some folks are nervous. I don't want to disqualify myself if I don't answer a question correctly, so don't worry. We will tell you where you can go get help for the application. That's another great thing about this program, that they are providing assistance with it. So we will discuss that here in a little bit. But also, lastly, we want you to select yes if the applicant business is a holding company or management company that owns or manages a business other than the applicant business, or if the applicant business is held or managed by a company that owns or manages other businesses. So you must count these entities as separate affiliates and locations. So let's go ahead and go to the next slide. We're going to talk a little bit about the PPP. So for those businesses that did apply for the PPP, this applies to you. So any funds that were already received through the Paycheck Protection Program will be subtracted from the applicant's final funding amount, and the applicant is verified using the EIN, ITIN, or Social Security associated with the PPP loan. If the applicant received a PPP loan, the applicant must use the same EIN number for the RRF application as it is used in its PPP application. So you have to use the same one. If the applicant applied for the first draw PPP loan for multiple locations under one EIN and subsequently applied for a second draw PPP loan under different EINs, the applicant must provide the EINs for each entity that received a second draw PPP loan. So make sure that you are putting the correct EINs. Again, if you had that second draw and you applied under a different EIN, that you're providing all that information. As Victor said, the more information you provide, the easier it is for them to process your application. And then upon applying for the RF, applicant must withdraw any outstanding PPP application. So if you have a PPP pending application now, you may have to withdraw it. I know that the PPP program is almost at a close, and many banks are no longer accepting applications, or they have a lot of pending applications that are just that they haven't determined whether they're going to be approved or funded. So again, if you're under that boat where you haven't had your PPP application approved and funded, then we recommend that you withdraw that application. The applicant must not have a pending application for or have received the shuttered venue operators grant from the SBA. So I know we call that double dipping. So because of the types of programs that these are the shuttered venue and the RRF, you can't utilize both. Next slide, please. So all applicants must certify that current economic uncertainty makes the funding request necessary to support ongoing and anticipated operations. So just a little disclosure here, but next slide, please. So what are the eligible uses of the funds? So this is where I'm going to discuss what you can spend the money on. So it's not you just get the money and, oh, I got the money for my business. And no, you have to make sure that you track where the money is being used very well, because and we will discuss why you will need this. But first, let's go ahead and go through the business expenses that you are allowed to use the funds on. So you can use them on business payroll costs to include sick leave, business and utility payments, any maintenance expenses, supplies, and this includes protective equipment and cleaning materials that you needed to do to be in compliance with the health department requirements. Business food and beverage expenses also includes raw materials, covered supplier costs, also business operating expenses such as insurance, marketing fees, licenses, legal, POS equipment, etc. So these are the business expenses that you can use. Construction expenses. So construction of outdoor seating. So if you had to do any construction of outdoor seating to be able to continue to operate your business, this is the only thing you can spend it on. And also and expansion costs are ineligible. So if you wanted to expand your business or make it bigger, it does not apply to that. But construction that was done for outdoor seating specifically, yes. Business debt. So payments, again, this is one of the other great things about this program is that you can use it to pay, make payments on any business mortgage obligation, so both principal and interest. This does not include any prepayment or principal or interest. So business debt service, so both principal and interest, and this does not include any prepayment, again, or principal or interest. So it can be used to pay off some business debt. Again, some of the other programs that we had were not as flexible as this program. So that's another great thing about this program. But let's go ahead and go on to the next slide. So by when do you have to use the funds? Again, I mentioned earlier that, for example, a PPP you were to use during that covered period of whether it was 8 to 24 weeks. But with the RRF, you actually have until March 11th of 2023. So all funds must be spent by then. If the business permanently closes after receiving the funds, the covered period will end when the business permanently closes, or on March 11, 2023, whichever occurs sooner. So if you permanently close your business, then you are essentially terminating the program. All funds not spent on eligible expenses by the time the cover period ends must be returned to the government. So if you didn't use up all the money by March 11th, or you didn't use up all the money by the time your business permanently closed, or you did not spend it on eligible expenses, the money has to be returned to the government. And that is why I was saying that it's important to track what you're spending the money on, because you want to make sure that you don't fall under this category where you are having to return money to the government. So let's go ahead and go to the next slide, please. So when do I have to use the funds? Continued. So you have to use the use of funds assessment. So after the total award funds have been exhausted, entities must provide a detailed expenditure report and certification. So as I was saying, for that required period. So you have to provide that detailed expenditure report. So make sure you are keeping good documentations and keeping all your records for this purpose. Until applicant completes the use of funds assessment, beginning December 2021, applicants are required to provide self-reported unaudited data detailing use of distributed funds each year through 2023. So again, you have to provide a self-reported unaudited data detailing the use of so you don't wait until March of 2023 when the program ends to provide that report. So they want you to provide an update in December until 2023 when the program ends. Did I miss something, Victor? Is there anything you want to add with that?
No, ma'am. The only thing I want to reemphasize is the use of funds. You want to definitely use them before 2023. The SBA will definitely be asking for reports if you have not used it by the end of every year, as far as the expenses and what you use it on. So very important that if you're going to use it, make sure you keep your expenditure reports. And if you do have any funds, you try to use them by the set date. Otherwise, as Luisana mentioned, you will have to return the remaining amount back to the SBA.
And this last bullet here says, that the SBA will provide additional guidance that will outline the detailed reporting requirements and procedures in the coming weeks. So they don't quite have that out yet, but don't worry. We will have that and provide that for you. I know it gets kind of nerve-wracking when you're saying, oh my goodness, if I don't do this right, I'm gonna have to pay this money back. And we definitely don't want you to feel intimidated by these requirements and then choose not to apply. By all means, if you're eligible and you absolutely need this money for your business, apply and just reach out to us, and we will provide you with our contact information as far as keeping you guys updated when these guidelines do come out, and so that you are that you know how to proceed with the use of the funds. So let's go ahead and go on to the next slide. We're going to talk about how to calculate your potential fund amount. So calculation 1, applicants in operation prior to or on January 1, 2019 will use their 2019 gross receipts minus the 2020 gross receipts minus PPP loan amounts. So you're going to do that 2019 minus the 2020 minus any PPP loan amounts. And this is both first and second draw PPP. Next slide. Calculation 2, applicants that began operations partially through 2019 will use this calculation. So average of their 2019 monthly gross receipts times 12 minus the 2020 gross receipt minus the PPP loan amount. So again, if you are an applicant that began operations partially through 2019, this is the calculation that you're going to want to use. Applicants that began operations partially in 2019 may choose to use either calculation 2 or 3, which I'm going to discuss next. However, calculation 3 could require a longer processing time. So it's up to you really whether you want to use calculation 2 or 3, but let me share more about what calculation 3 is. So we can go to the next slide. Applicants that began operations on or between January 1, 2020 and March 10, 2021, and applicants not yet open but have incurred eligible expenses as of March 11, 2021. The total amount spent on eligible expenses between February 15, 2020 and March 11, 2021, minus 2020 and 2021 gross receipts through March 11, 2021, minus again the PPP loan amounts. So any applicants that began operations partially in the 2019 may choose to use this calculation or calculation 2. But as I mentioned in the last slide, calculation 3 may require a longer processing time. Just because there's so much more to go through, especially if you're a business that you haven't quite opened, but you have obviously, you still are spending money to get that business opened up. So another great thing about this program is that those that weren't quite yet opened are eligible. Unlike the PPP, if you weren't open prior to February 15th, you weren't eligible for the PPP loan. So again, this program really is trying to be more inclusive and trying to open up the eligibility criteria for those businesses that didn't meet the eligibility criteria for our previous programs. So let's go ahead and go to the next slide. Going to calculation 4. So applicants that operate multiple locations using different calculations. So the applicants that operate multiple locations may calculate funding amounts for their locations using separate calculation methods, and then aggregate the amounts together. So the aggregated funding amount is limited to 5 million per location and 10 million for the applicant and its affiliates. So calculation 4 is for those with multiple locations using different calculations. And these are the limited amounts, 5 million per location and 10 million for the applicant and its affiliates. Next slide, please. And again, Victor, feel free to jump in if there's something you think that I missed, or that's important that you feel they should know about. I'd appreciate it. But let's go ahead and talk about what to exclude from the 2020 gross receipts. So do not include any of the following in your 2020 gross receipts. Your PPP loan. So you do not include that. That's going to be deducted in the calculation already. So we don't want it to be deducted twice. SBA Section 1112 payments, SBA Economic Injury Disaster Loan, the idle advance, the targeted idle advance, or any other grant funds received via the CARES Act, any state and local business grants. So if you apply to any of those state and local grants that were given for also the COVID relief programs, do not include those. And then the Randolph-Shepard Act Financial Relief and Restoration Payments, also known as FRRP appropriation. So don't include any of those. If you have any questions regarding these, I believe we have a chat, right? Are there any questions coming into the chat, Brian?
Yes, there was one question. It said, why is the amount of the PPP subtracted? I think it was in regard to the application.
Oh, in the calculations?
Yes.
Because the PPP loan is a forgivable loan. So once you're done using the PPP loan amounts and you've used up all the funds and your cover period has ended, you apply for forgiveness. Again, if you've used the funds the way they were intended, which is payroll, at least a minimum of 60% towards payroll, and the other 40% to eligible expenses, you become eligible for 100% forgiveness. And so that money essentially becomes free money. So again, remember I said that word double dipping. The government doesn't allow for us to double dip, especially on the same disaster, because this is all COVID related, right? There's been different programs that have come out. For example, the Economic Injury Disaster Loan, that's a loan that you pay back. So that is not included in this, right? That's separate because it's not essentially free money. The advance was a grant money, but it's not included in your gross receipts, and that's not being deducted. But the PPP loan, they've decided is just one thing that is not going to be included, and so they will deduct it off of this this fund amount that you would become eligible for.
Roxana?
I hope that. Go ahead, Victor.
So also for anybody that's already have an application for the SVOG grant, even if it hasn't been approved yet, but is in the process, you will not be able to qualify for the RRF unless you withdraw the application for the SVOG grant. Then you can apply for the RRF, which goes back to what Luisana has been saying is the double dipping. But it is a grant. PPP will be considered a forgivable loan. You should do the forgivable process. So essentially, you can't get all three. We're trying to really make this available to everybody within that industry. So it's very, very important that if you do have a first PPP and a second PPP, you put it on your application. We will run it through the system. And make sure that you deduct that from the total loan amount or the total fund amount, and we can process your loan a little bit faster. Just to let everybody know, if the more information you give us, again, the faster we can process your fund amount. The less amount of information you give us, the longer the delay. Right now, we're looking at 5 days turnaround time. So it's going by pretty quickly. So please, if you do have a PPP first, second draw, let us know. As far as SBA Section 112 payments, those are for those people that received a 7A loan or 504 loan or a traditional SBA loan program prior to COVID-19, and you had that loan and you were making payments on it. Section 1112 essentially allows the SBA to make payments for you on your behalf for up to 6 months. A lot of the folks that received 1112 payments should have received a letter in the mail with the statement saying that the SBA paid that amount for that particular month or in the next 6 months. So if you have any questions on 1112 payments, please give us a call, let us know, and we can get more information to you.
Thank you, Victor. Let's go ahead and go to the next slide. Okay, so how do you apply? First and foremost, you have to register. So make sure you, when you go to this restaurants.sba.gov, it's going to prompt you to register first. If you've already registered and are returning to apply, then you would go back in and just complete your application. But you can also go through a point of sale vendor. Do you know what are some of those point of sale vendors, Victor?
Let me go back one more slide. Sorry about that. The vendors that are currently working is Clover, Square, PayPal should be coming online here in a bit. And I believe there are 2, Cake is the other one, and there's one more. It's a little bit smaller than the aforementioned ones, but call your POS vendor first. Let them know if they're participating in the Restaurant Revitalization Fund. If they are, they'll be able to assist you with the application process. If not, definitely go to our SBA platform. If you don't have access to internet or you need assistance one-on-one, definitely give us a call, 844-279-8898. Just know that it's going to take a little bit longer for them to process because they're taking it over the phone and they got to enter all that information into the system. And additionally, you will have to provide supporting documentation through fax, which will also delay the processing of your application. So the best way to do it is go through our website. Second best way is a point of sale vendor. And the third best way is to give us a call.
Thank you, Victor. And remember, as I was mentioning, that this is the one program where they're actually providing assistance with filling out the application. So when we were talking about the affiliates and what to answer on some of those, and you're not quite sure and you don't want to disqualify yourself, you know, by all means, feel free to call this 844 number 279-8898. This number has been specifically designated for the RF application and also helpline. So if you haven't run into any issues with the website or your application, or you're getting any error codes, you can call this number here. Let's go ahead and go to the next slide. So what documents do you need to apply? Again, the application is going to be SBA Form 3172, completed, initialed, and signed. Completion of this form digitally on the SBA grant platform will satisfy this requirement. You will also need verification for your tax information. So IRS Form 4506T, completed and also signed by the applicant. Completion of this form digitally will also satisfy this requirement through the SBA grant platform. Any gross receipts, documentation. So any of the following documents demonstrating gross receipts and eligible expenses. So any business tax returns, this includes your IRS Form 1120 or 1120S, your IRS Form 11, your 1040, your Schedule C, your 1040 Schedule F. For partnership, you're going to need your Form 1065, bank statements. Oh, and that's also including your K-1s. Externally or internally prepared financial statements such as income statements or profit and loss statements. You're going to want to provide those also, and any point of sales report. So if which is why when you apply through your POS provider, that they can help you with this, because they should be able to pull up reports, if I'm not mistaken. Correct, Victor?
Correct. They can pull up the reports for you. They can do that processing for you if they're a participating vendor. Otherwise, you can pull the report from the system yourself. The one thing you do have to take note of is anything that is not your tax returns, where the point of sale system, your CPA, or even yourself, such as any financial statements, income statements, profit and loss statements, including the reports from point of sale, they do have to be signed and dated by yourself or by the CPA if the CPA or accountant are the ones that prepare it. Without the signature or dates, we will be kicking that back until we receive that documentation. So very important when you look at your own personal prepared financial statements or financial statement prepared by your accountant, CPA, they must be signed and dated in order for us to accept.
Thank you, Victor. So let's go ahead and go to our next slide. So again, required application SBA Form 3172. Oh, and this is what's required for calculations 1 and 2, just to be clear. So the application SBA Form 3172, the tax verification, your 2019 gross receipts, your tax returns, your most recent 3-month bank statements, your 2020 gross receipts, preferred are your federal tax returns filed, or again, your point of sales report. Also accepted may delay the review past 14 days. So externally or internally prepared financial statements, such as income statements or profit loss statements, signed, dated, or certified as to accuracy by applicant. So as Victor mentioned, they have to be signed and dated. So make sure that you are paying close attention to the forms that you are submitting, that they're complete, that they have the required signatures and dates, and they are signed, and they can be signed digitally as mentioned in previous slides, but this is what's needed at least for calculations 1 and 2. Now let's discuss what's going to be needed for calculation 3. Can we go to the next slide? So you're going to need, again, the application SBA Form 3172, tax verification, again, the most recent bank statements, the last 3, 2020 and 2021 gross receipts, at least 1 for each year. And preferred, it's got here federal tax returns filed for 2020. They can be prepared but not yet filed. The 2020 point of sales reports, 2021 point of sales reports. Accepted are any externally or internally prepared financial statements, as we mentioned earlier, but they have to be signed and dated. Eligible expenses, documentations for expenses between February 15, 2020 to March 11, 2021, in at least 1. Preferred would be the qualified third-party accountant, bookkeeper, or CPA comfort letter. Again, these also must be, these are provided for fastest SBA review. So again, do these have to be signed and dated, Victor?
Yes, anything again that's outside of the preferred, which is mentioned on top, the tax returns or point of sale reports for 2019, 2020, even 2021, they must be signed and dated by the owner, president, or CPA or accountant. Very, very important. Otherwise, we will be kicking that back.
So accepted, which may delay review past 14 days. That's why we're providing you with the preferred documents that they would prefer to receive, but we're also providing you with accepted ones. But again, if you're not submitting the preferred documentation, it may delay the review of your application. So again, accepted are any externally internally prepared financial statements, but again, signed and dated. And all expense documentations, as I mentioned earlier, for payroll documents, outdoor seating expenditures, invoices, payments, business debt, lender loan statements. So you can also provide those. But let's go ahead and go on to the next slide. Brian, do we have any questions that have popped up in the chat?
Yes, it was a follow-up to the PPP question. It says, so this, if this application is all expenses, not payroll, would it still be deducted?
Victor, I think that question's more for you.
Can you repeat the question, Brian? I don't think I understand it.
I
Yeah.
didn't either.
Sure. It says, if this application is all expenses, not payroll, would it still be deducted? Yeah, I think it's in regard to the PPP being subtracted or
Yeah,
included.
well, payroll is included in these expenses.
And
So
yes, regardless of how they use the PPP, the amount will still be deducted from the total. It's just it was created in policy, and as Luisana mentioned, whether or not you get it forgiven, it's still part of the calculation process, and that goes for all calculations 1 through 4.
thank you, Victor. And let us know if they have a follow-up question, Brian. But I'm going to go ahead and continue with this slide here.
Okay.
For additional documents that you will need to apply. So applicants that are a brew pub, tasting room, tap room, brewery, winery, distillery, or bakery that we talked about earlier, that they're going to need documents that are going to prove that the on-site sales to the public do make up at least 33% of the gross receipts of 2019. So this includes tax or trade bureau forms, state and local forms filed, or any internally created reports from inventory management, sales reporting, or accounting software. For businesses that opened in 2020, the applicant's original business model should have contemplated at least 33% of the gross receipts in on-site sales to the public. So that was that little asterisk that we talked about earlier. So let's make sure that you guys understand that if you do not meet this minimum of 33%, then you are not eligible. I know that these tend to be entities that do a lot more wholesale. So, but at least the sales to the public, they have to meet this 33%. And you have to provide documentation that proves that. For applicants that are in, documents that can prove that on-site sales of food and beverages to the public also make up the 33% of gross receipts for 2019. And for those that open in 2020, the applicant's original business model should be able to have contemplated that at least 33% of the gross receipts in on-site sales were food and beverages to the public. Again, if you have more questions about exactly what to provide, we do have the helpline that I gave earlier, which is also on our next slide, the 844-279-8898. You can also go to our local assistance tab, which is right here. If you go SBA.gov, there should be a tab at the top that says local assistance, and you can try to reach out to any of our local resource partners. That they are SCORE, Small Business Development Center, the Women Business Center, there's the Veteran Business Outreach Center, but we recommend that you attempt to reach out to them, and they would be able to assist you. And there's also help available in multiple languages. So if you go to our SBA.gov under the RRF, you should be able to find all the information and in multiple languages. Next slide, please. So best practices, again, provide complete documentation. As Victor mentioned, it's very, very important that you provide everything that they are requiring, that all signatures and dates are on there. The more information you provide, it's gonna avoid any delay of processing of your application. So leverage your resources, will not require the use of CPAs and other accounting professionals, and it may help ensure a complete and well-documented application. And application corrections, so the SBA will not make any corrections on behalf of applicants. Applicants who require corrections will need to contact and call the hotline that we provided. Again, that number is here. Applicants who still intend to apply for PPP, remember that if applicants are advised to complete their PPP applications in advance, which that probably will not be much of an issue since many of our financial institutions are no longer taking PPP applications. But remember, if you do have a pending application and you're trying to apply for this and you have not been approved, you may want to consider removing or canceling that application altogether. Next slide, please. We're not going through the pilot period anymore, are we, Victor?
We are. So anybody that is covered under one of the following categories, which is women-owned, veterans, socially economic disadvantage applicants, will be funded for the first 21 days. Please note that 21 days is ending on May 25th. So the sooner you can get your application, if you fall under one of these categories, the sooner we can get your application processed. Anybody that does not fall under those categories, you can still submit your application. After the 25th, we will begin processing all applications regardless of the categories or type of business. So very important that you submit your application whether or not you fall under those categories.
Thank you, Victor. So as of day 22, all eligible applicants will be processed and funded until the program funds are exhausted. So we have to discuss our pilot period, and then there's also our priority period, which is day 1 through 21, and only applicants for small businesses owned by women, veterans, socially and economically disadvantaged applicants will be funded during this period. So that is the priority period, which you said ends next week, Tuesday, right, Victor? The 25th?
Yes, next week.
And let's go ahead and go to the next slide and talk more about our priority groups. So a small business concern that is at least 51% owned and managed on a daily basis, operations of the applicant are controlled by one or more individual who are a woman, a veteran, or socially economically disadvantaged. So they have to have at least 51% owned and the management of the daily operations. Applicants must self-certify on the application that they meet eligibility requirements. An example is an applicant has 5 owners who each own 20% of the applicant. 2 owners are veterans. The 1 owner is a socially economically disadvantaged. The SBA will consider this applicant to meet the requirement that is at least 51%. So if more than one of the owners meets this criteria, and they're not all necessary women, they're not all necessary veterans, but they're mixed and matched, that definitely will be considered to meet this requirement of the 51%. So let's go ahead and go to the next slide, and we're going to talk about the definitions of socially disadvantaged individuals, and those are those who have been subject to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. So individuals who are a member of the following groups are presumed to be socially disadvantaged if you're Black Americans, Hispanic Americans, Native Americans, and this includes Alaska Natives and Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. Those that are economically disadvantaged individuals are those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business area who are not socially disadvantaged. So those are just some definitions, so to get a better understanding of what those mean. So entity or reorganization for purpose of qualification for the priority period will result in automatic disqualification of the award. So this is very, very, very important. This is like the fine print, but in bold. We really want you to understand that any entity that attempts to reorganize for the purpose of qualifying under these priority groups will be automatically disqualified. Do you have anything to add to that, Victor?
No, just very important as far as the reorganization. We have had companies reorganize within the last couple of weeks just to qualify under women-owned. Very important. We will find out because we do request documentation for some of these things. So please don't try to reorganize. It's an automatic disqual. Additionally, all the K1s, for those of you that fall under the K1s, make sure that we have K1s for all your members or participating members of your LLC or your S corporation. Sometimes we'll see on the application that there's a 51% for a woman-owned small business. However, on the K1, it only shows 50%. So very important that when you look at this, you do follow the guidelines. We don't want to disqualify anybody for the purposes of this fund.
Alrighty, next we're going to talk about funding set-asides. And that's $5 billion is set aside for applicants with 2019 gross receipts of not more than 500,000. An additional $4 billion is set aside for applicants with 2019 gross receipts from 500,001 to 1,500,000. And then an additional 500 million is set aside for applicants with 2019 gross receipts of more than 50,000. So the SBA reserves the right to reallocate these funds at the discretion of the administrator. So this is just kind of where they decided to set money aside for. They really want to try to make it fair for everyone, especially those entities that are much, much smaller entities that have to compete against these bigger entities for this help. What's next? The Q&A. Did we have any more questions pop up, Brian? Were we finally able to cover that PPP question?
Yes, it was covered. The person said thank you.
Okay, great, great. Now, are there any other questions? I know some of those affiliate information was very, very specific, and we definitely don't want anybody to feel intimidated by the information. By all means, apply if you are eligible. Gather all your stuff together. Visit that restaurants.sba.gov to register and apply. If you have any questions, you can also feel free to contact us at the Fresno District Office, and we are more than happy to try to point you in the right direction. Utilize our resource partners that I mentioned earlier, our Small Business Development Center, our Women Business Center, Veteran Business Outreach Center, and our SCORE Business Mentors. They are there to help you. They are a free service. And so, you know, we really, really try to push those out to all of our business owners, because some don't know that our resource partners are there to help. Victor, do you have anything else to add?
The only thing I would like to add to this process that's not really mentioned in the presentation is make sure that your numbers do align. We've seen profit and loss statements that have been created that do not match your tax returns or that do not match what's stated on the application. So it's very important when you're doing your calculations that the numbers match according to what documentations you're going to submit. As far as certifications, this is all self-certified, meaning that anything that you certify as far as women-owned or socioeconomic or any of the other groups that were mentioned, it's all self-certified unless there's something that we will be questioning. And lastly, please make sure that when you do submit your bank statements, if you do submit bank statements, that they're clear. Same thing for your tax returns. We've seen folks upload pictures of their tax returns, and unfortunately, the system will not allow for pictures on all, sometimes 40 or 50 pages of your tax returns. So if you can please scan the documents over into one PDF, that would be very much appreciated and a lot easier for reviewers to go through. If you don't have access to a scanner, the local library, contact your local SBDC, Women's Business Center, Veteran Business Outreach Centers, or any of the other resource partners that we have at the SBA, so we can get those scanned in and make it easier for you. Again, as Luisana mentioned in the last slide, funding is very minimal. Right now we're at 28.5 billion. So the sooner we can get your applications in, get those processed, the sooner you can get your funding. Right now, the processing time is rather quickly. As I mentioned, it's around 5 to 10 business days. So we want to get to you right away. But again, if there's information missing or if the information is not correct or we can't read the documents, we will not be able to assist you and provide that funding that you so need. Other than that, Brian, any other questions?